Welcome to the Wall Street Blockchain Alliance's Crypto Roundup. Today is Friday, September 8th. Missed you all last week. Hope you all had a great Labor Day weekend. We're back with my co-hosts, David Brill and Josh Klayman. It's good to see you both. Before we begin, for everyone in the audience, obviously, as we usually say, please keep in mind nothing discussed is accounting, investment, legal, or tax advice. And please do submit your questions in the chat. Josh and David and I will get to them as quickly as we can. David, Josh, it's good to see you both. How are you?
Great. I'm here in New York, enjoying the hot weather with everybody.
I feel like you have hot weather in Florida, and then you come to New York, and it's hotter.
Yes. Just no ocean and pool in New York, but no, it's definitely. It seems like I brought the heat up north of me.
And so we have you to thank for this, David.
Yes. And Josh, as always, old friend, good to see you. I wanted to kick us off. There's a lot that's been going on this week. We've talked about it a little in prep in some of our messages. I'm still digesting Grayscale, so I'd love to dive into that if you're both comfortable with that. And for the audience who may not know, I suspect everyone does know, and someone correct me if I'm wrong, a DC appeals court basically vacated the SEC's rejection and said the SEC must review Grayscale's filing for a Bitcoin ETF. David, Josh, what were your thoughts on that, and what were your perspectives on the impact that had on the market?
So, my original thought was I wasn't necessarily surprised. I thought that this was the way the court was going to rule, and I think the sentiment among people in this space was that the fact that it was 3-0 on the ruling was a little surprising, and I think that the language was, saying that the SEC was arbitrary and capricious was, I thought, a little surprising to me. I think also what I'm most curious about now, and I definitely want to hear Josh's take, is, will the SEC appeal in this 45-day window they have? And, will they go en banc to the whole circuit court, or will they let the decision stand? So I'm really curious about that. And Josh, if you have a view on that, curious to hear your thoughts.
So, it's a great question. I certainly don't know. I don't have my crystal ball handy to know whether they'll appeal. What I would say is, even if the standard is arbitrary and capricious, right, for the determination, I think it's still, like David said, to see that there has not been, at least to this point, as much judicial deference to the SEC on some of these matters as perhaps some may have expected. Maybe not in the digital asset space, who, as David said, many saw this coming or hoped to see it coming. But I think just it seems that there have been a number of decisions, some of which we'll discuss today, where it's gone a little bit differently, perhaps, than how the SEC might have hoped. Now, I do think that with respect to the decision itself and the reasoning makes a lot of sense. Saying, look, a spot ETF and the futures, it's based on a highly correlated underlying asset. And also this idea that, okay, if the CME's surveillance sharing is sufficient for the futures, should be sufficient for a spot ETF. Like it makes sense. But yeah, in terms of whether the SEC appeals, it's possible. I guess the question is, what do they have anything to lose, and what do they have to lose? As we saw, they've extended now the dates, as they have in the past, for reviewing certain of the applications. And so if what they're trying to do is delay as much as possible, perhaps what happens if they try and appeal and they lose, then they lose, which they've lost right now.
Josh, David, it's really interesting. Yeah, as I digested some of that, I read a really interesting. You both alluded to something that I found really fascinating as a non-attorney. This perspective that the judiciary and judges pushing back on regulators. And I read this really fascinating article. I think it was in the Wall Street Journal, not crypto related, but it was related to the SEC's rulings in the private markets. And some of the surveillance and regulations that they're proposing there, and how a lot of organizations are kind of pushing back through the courts on regulators. And we all know a lot of lawyers. We know a lot of lawyers in our legal working group. And I think for a long time, if a regulator said, particularly the SEC, look, this needs to be done, courts would generally incline to say, sure, you're the regulator. That makes sense. I'm vastly oversimplifying. What I think we're seeing a shift in judges' perspectives on, you know what, maybe this regulator is wrong. And I see that reflective in some of the rulings. Like, for example, the Grayscale ruling, as I read it, and correct me if I'm wrong, you're both attorneys, was really well considered. It was really well considered in the context of the data that they analyzed, in the context of the submissions from both, and its comparison against other approved ETFs. So is that a shift from a judicial perspective? Would you both agree with that, or am I kind of overreading what we're seeing in some of these rulings?
Well, what I would say is, like, definitely not an expert on these things, but a lot of the rulings have been going against sort of regulatory overreach. And some of the Supreme Court here decisions recently talk about, reining in a little bit and narrowing the scope of regulation instead of expanding the scope. So I think as a thematically, I agree. I think in our space, there have been rulings that have, there have been enforcement actions and positions taken that the courts have seen differently, with their lens and the facts. And so, in a way, like we've said before on this, on our podcast, the judiciary is acting as that check and balance that it was intended to be, when we think of the three branches of government. So I think, it is working as it should. It's just unfortunate that a lot of these cases sort of need to go to this level of interaction to get the results, that we're seeing.
Yeah, I mean, I agree with David. I also think this really shows the power of the amicus briefs, right? Like even in this Grayscale case, Coinbase submitted one, Coin Center, certain of the other trade associations, I'm sure others who are escaping my my tongue at the moment. But I think that this is reflected in a lot of the decisions that we're getting, because what I think is making these courts, in many cases, be able to give such reasoned decisions is that they have the power of pre-digested additional context, right? And arguments. And I think that really shows for all those writing amicus briefs, bravo, and keep going.
Yeah.
So,
Oh, Ron, I was just going to say, look, I think the industry deserves credit on the whole for coming together, with various different trade associations and different groups to do these amicus briefs and to, you never know, like, I think there's sometimes people may be competitors to each other, but people are seeing the bigger picture here and seeing that these rulings are really important and getting behind different cases, that support the industry.
Yeah, it's interesting as we talk about this. I have colleagues that reach out to me certainly, and say, sounds like we're beating up on the SEC. And for the audience, certainly that's not what we're doing. We're really trying to level set and understand why some of the decisions that are made are being made, and how the industry can evolve in the wake of those decisions, and how potentially laws need to be changed. So, of course, not long after the Grayscale stuff, it seemed to be regulation by enforcement again. And SEC came for an NFT provider, I believe it was called Impact Theory. I don't know them. I don't know what the NFTs were, but it seemed to be a pretty rough kind of enforcement action against Impact Theory and NFTs. And if I recall correctly, this is their first foray, the SEC's, into enforcement of NFTs as unregistered securities. What did you both take out of kind of that enforcement ruling? And is this just, doubling down by the SEC? What were your thoughts on that kind of on that enforcement action? Josh, you got to go first because David.
Yeah.
Sure. So I think, for a long time, Gary Gensler and others at the SEC have been indicating, look, NFTs, you need to look facts and circumstances. Anything can be a sale of a security. And so I think having something written down, having something in the public, giving an example of that, I think from the SEC's perspective is important. I think it's fascinating. Some really interesting points about this decision, which in many ways echoes, a lot of the kinds of marketing that we saw with the enforcement against ICOs in general, right? Saying something's going to go up in value, et cetera. But it was emphasized in the dissent which was a pretty strong dissent by Commissioners Peirce and Ueda. If I'm mispronouncing that, please let me know. But a couple of things that they said was, look, we should have been addressing these questions a long time ago because this is going to have a lot of impact on other projects that are already out there. A couple of other things that they said was one, which I think is really interesting, is that one part of the settlement required that the smart contracts be changed to deprogram or prevent or stop the payment of royalties back to for secondary sales back to impact theory. And the dissent said, hey, look, this could have an impact on artists and others, content providers who are getting rewarded. And the other part I thought was super interesting was that, as was pointed out in the dissent, and there is, of course, a counter argument that I can say really quickly, but one is that often rescission is a remedy in these types of cases. And here, impact theory, I think it refunded, it did offer to repurchase the NFTs, and I think it paid out something like $7 million. I could be wrong on that figure, but interestingly, that was highlighted, that they did in fact do something that would be a potential remedy. Now, the counter argument, of course, is, well, if you had an offer and sale of an unregistered security, you should have, in order to do a rescission offer or a tender offer, or an offer to repurchase, you should have registered that. But anyway, let me pause for David.
No, look, I think marketing matters. I think we kind of said that multiple times with the ICOs and with the NFTs, how they're marketed really matters. I think the royalty element is definitely problematic because we do want, content providers and creators to get royalties. And, if you have an NFT platform that's enabling that to happen, I think we all hope that they're not going to be considered securities, but it's just difficult. I mean, I think of, we talked about this in a meeting we had. I think about limited edition baseball cards or comic books or coins. They may not say explicitly these are going to go up in value, but implicitly when these things are sold, people read between the lines and, believe that they're buying these. A, they might want to own them and look at them, but B, because they think they're going to go up in value. And so I don't think we can ignore that.
David, I agree. That being said, though, not to play devil's advocate, you and I have been we've all been in financial markets in some way, shape, or form for a long time. We know enough that if you market something by saying, this is definitely going to go up in value, or you're playing with fire, irregardless of whether or not it's the crypto or NFT world. So I'm always shocked when I read these kind of guarantees or this marketing stuff that comes from these firms that are saying these extraordinary claims that many people know would get you in trouble with regulators, regardless of what instrument you're talking about. I want to ask about one question, though, because something that often comes back in the dialogue about this is, and there was a really interesting article, I forgot what magazine it was, but it basically said, Gensler comes out after NFTs 2 years later. What's the point? I want to really kind of put aside this perspective that, well, why wait so long? Isn't it true that these cases do take time and resource to build? Or is there something to be said for they wait a long time, they go after arguably small fry in this space? What do we read into those kind of long lags of these enforcement actions?
Look, having advised companies that have been in this sort of situations, these things take time. There are information requests. They can become subpoenas. There's time you're allowed to respond. There's refining the questions that are asked, what's relevant. So these things do take a fair amount of time, and document productions take a fair amount of time. So there is, in a non-urgent, fraud situation, it takes time to build the cases. And look, I think it probably takes time for some of the people prosecuting these cases to understand exactly what's being offered and sort of get their arms around it. And I guess there's a question which, how much bandwidth does the commission have to bring? And, how are they choosing what they're bringing? So in fairness, I do think that these things are complex. They take time. And you just can't sort of flip the switch and bring actions.
Yeah, and just to build on that, I think also a lot of the times when we see these announcements of an enforcement action, it's actually an announcement of a settlement.
Yeah.
Right. So to
Right,
get to the
right.
point where an issuer or other party is willing to settle, I mean, that's pretty, there's a reason by that point,
Yep.
right? Interestingly, though, as we've talked about in the past, I mean, there have been cases out there, including, I believe, the case against Dapper Labs, right, where I think I haven't been following it that closely actually over time, but I remember when there was the initial, I believe it was the motion to dismiss, that baseball card analogy was raised, and it actually was, I believe, rejected by that particular court. But it is, I mean, these things are all subject to argument because they're all different facts and circumstances.
And I think
I want to give my thanks to the audience, to Josh for showing out off the WSBA swag. Josh, thank you. Thank you for that. David, I cut you off. Go ahead, buddy.
I was just going to say, I think the dissent makes a good point that, there's lack of clarity. And although it seems like in this case, they may have just been a little too exuberant in their marketing, there is a lack of clarity. And I think that's a challenge.
I want to stop for a moment, if you both don't mind. I want to shout out to LinkedIn user who said good morning. Good morning, whoever you may be, but thank you for joining us. Really great question by Lisa. Thanks for joining. How much are the bank lobbyists playing a role? So I don't know the answer to this directly, but David, Josh, and it's not even on our agenda of talking points today, but clearly the banks are deeply involved in a lot of what we're talking about. So I'm certain there's some level of bank lobbyist engagement on the Hill, particularly when you look at the recent news, JP Morgan pushing forward on a deposit token leveraging blockchain. I've got to imagine bank lobbyists are in pretty intricate conversations on the Hill. David, Josh, would you agree?
I mean, look, I can't.
We're not
I can't
lobbyists.
speak for them, but I'm assuming that smart companies are advocating for their positions in the marketplace. But it's very hard to tell. Look, I think you have entrenched interests who are, lobbying for their view of the world, and it's very typical. So it's really hard to say from the outside. But I think you are seeing crypto companies put more money towards lobbying trade associations, and so I think everybody's getting involved, and it's a dynamic conversation.
I'm sure banks getting involved in the crypto space, David, arguably makes crypto purists a bit upset, but that's a topic for a whole other conversation. There's other things we want to cover on the agenda, and I know we've only got 10 or 15 minutes. The other interesting case that I had seen, and it sounds like a very legal session entirely, we'll get to some market commentary, was the Uniswap class action suit that was dismissed, which I found fascinating on a couple of levels. But Josh, what did you think when you saw the Uniswap decision, and what does that kind of mean for the wider industry?
So I thought it was going to have large ripple effects. No pun intended. I thought
No pun intended.
a few things I thought was really interesting. The fact that the judge is the same judge presiding over the Coinbase case and the Tornado Cash case, and that judge, at least in the context of DeFi, specifically said sort of something to the effect that, this is a paraphrase, that the SEC was behind the curve in terms of DeFi and that this was a matter really for Congress. To my mind, like not just looking at the Uniswap case, it made me think about the kinds of arguments that are being made in those other two cases about the major questions doctrine. So I think it's fascinating to watch this happen in real time. And I will pause for David, but I would plug just that, the SEC may not have squarely addressed DeFi, but the IOSCO report just came out and the lead authors, the SEC. So, and it's focused on DeFi. So over to David.
I thought this was a positive ruling for the space, and I also agree in principle. And it's very interesting. This is a civil case, and I think this ruling is very favorable to the crypto market. And I just wonder if Tornado Cash wasn't about bad actors, potentially obfuscating funds, and was more of a civil case, whether that ruling would be different. And so it's really interesting because I feel like, and this is just an impression, that judges in these sort of civil type cases have a lot more seem to be have more candor and just feel more comfortable stating their opinions and their beliefs, some backed by the law, some backed by their own opinions. Whereas I feel like in these alleged criminal cases, it's a very different sort of lens. So I thought this was very positive. I think I agree. I thought it was thoughtful. And ultimately, like they said, I'm paraphrasing poorly, but if you build an application and people abuse that application, it wasn't built to be abused. It was built for people to use it. And like people just have to have responsibility who are doing those things, not for people who are making technology broadly available.
Yeah. And is it okay if I just read a bit from this this decision?
You are a host. You can read whatever you please.
So one of the things that was said, it starts on page 36 and continues on. And this was going to this this idea about whether the defendants, did something wrong by putting in place this type of a system, right? Which again, this goes to David's point. Would, if Tornado Cash had been about something else, not matters of national security, might it have come out differently? It says, indeed, this is less like a manufacturing defect and more like a suit attempting to hold an application like Venmo or Zelle liable for a drug deal that used the platform to facilitate a fund transfer. There, as here, collateral third-party intervention causes the harm, not the underlying platform. In this regard, the court sees merit in defendants' counterpoint that this case is more like an effort to hold a developer of self-driving cars liable for a third party's use of the car to commit a traffic violation or to rob a bank. In those circumstances, one would not sue the car company. And it keeps going. But I just think that those are pretty powerful words.
Yeah. Just real quickly, as we've seen all of these rulings come from the courts, again, I keep going back to this idea that judges and the courts understand the marketplace really deeply. I remember conversations we had 2 or 3 years ago, and one of the concerns was judges and the courts may not understand the depth and complexity of some of the technology. And I think we've truly seen that evolution from the judiciary perspective. The other shift I've seen, and I'd love your perspectives on this, is I remember distinctly 2 or 3 months ago, and one of you correct me if I'm wrong, we've been at several meetings together where the major questions doctrine came up as a possible line, or this, violations of the APA came up as a possible line. And I remember really smart people telling me that's never going to go anywhere, Ron. The major questions doctrine stuff is not going to be how the industry moves forward. And yet a couple of months later, it really does seem that issue has legs. Am I misinterpreting that? You got to start now, David. Don't make me call on people.
I've been thinking about this. I do believe it has legs, but I don't know where it sits sort of in the judicial, is it a winning argument or is it something being considered? I mean, I do think ultimately Congress will have to come up with a regime for crypto. And if the courts and judges feel that the commission is sort of usurping Congress's power and is enforcing private companies on that basis, then I think there is a real consideration. But I haven't totally formed a view if that's going to be a prevailing argument in these cases.
The problem becomes when you bring up Congress, where we know these laws need to come from. We bring in politics, we bring in an election year coming up, and we bring in all of the kind of mess that's associated with. We've got a few minutes left. Please keep questions coming, and if we don't answer any of them, please do reach out to us, info@wsba.co. Josh, David, I want to move forward on Josh, I'm sorry, did you have one last thing to add to that?
Oh, I did, but I mean, okay, I'll just say it quickly, which is, I mean, one of the challenges is that, like it or not, our regulators, at least in the US, have become very savvy with digital assets and the technology in a way that our Congress as a whole, in my view, appears not to. So to the extent that we are relying upon Congress to pass laws that make sense, I think that will involve continued lobbying and education and everything from the industry.
Yeah. And we continue, Josh, as you know, to have those conversations. We haven't been to DC in a bit, but we've met with staffers. We've met with regulators from an educational perspective. We're not lobbyists because there's so much evolving in this ecosystem that we think it's really important to to make sure we have that conversation and try to represent voice of industry. David, I want to pivot a little bit. Something that you and I didn't have an opportunity to chat about right before Labor Day is kind of market and price action. I would argue that a lot of the lift that, pardon me, that we've seen, particularly in the wake of the Ripple case, I kind of feel like a lot of the benefit of that's been pulled out of the market. Bitcoin in this really narrow range, give or take, what are we looking at? 25 to 27,000, give or take. And I think on the week we're marginally up, but down on the month. What are you seeing from a price action perspective?
So I think there's just not a lot of new capital coming into the market. And I think we have these macro issues that are affecting risk assets, and crypto is a risk asset. And lately we're seeing a lot of coins go back on exchange, which usually precedes selling. Usually if you're going to bring a large amount of tokens back on exchange, you want to sell them. So I think that we're in this period where it doesn't look like right now we're going to see an ETF if it's approved until early 2024, maybe March, April 2024. So I think we don't really have a catalyst right now for people to put new capital to work. And I think, the economy in China is tough. Risk assets are tough. The interest rates may go up further. So I don't know from a macro perspective if it's, the environment for crypto to have a run from here.
And we're still in a broad, relatively speaking, risk-off environment, I would argue, David, particularly when we're looking at every punctuation and letter and word that comes out of the Fed around the future of interest rates, which is really, really interesting. Josh, David, I'm sorry.
We have this commercial real estate issue that's bubbling up. Yeah. And I know we're not talking about that broadly, but that is going to be an issue. And a lot of banks have a lot of commercial real estate paper on their balance sheets, and something's going to have to give with that. So I think that's just something else to keep in mind, that maybe banks are being, lending less and just being more careful about who they're lending to, and that's just another macro headwind, that's out there.
Yeah. Appreciate it, David. Thanks so much. Nisa, thanks for chiming in. It's been too long. Great question. And Josh, I'd love to throw this your way. What do you think about CFTC DeFi cases? I know one dropped last night or this morning. I still have a pile of things I need to read on my desk, but Josh, would you want to weigh in on Nisa's question?
Sure. So I think it's really interesting to see the CFTC weighing in here now about these DeFi, basically the offering of allegedly illegal offering of leveraged and margin retail commodity transactions. I think what I would say about this, although the specific facts of the various cases need to look at more closely, but I think this ties in really well with the IOSCO reports released just in the past day or so. Because as I noted earlier, while the SEC was the chief author of the DeFi recommendations, the CFTC also was a contributor to this report, along with many folks from around the world, different governments. The reason I raise this is one of the thrusts, I would say, of this IOSCO report, which again talks about global treatment. Some of it related to same risk, same activity, same regulatory outcome, and really sections mapping, different activities involving DeFi and how they could map to being exchanges or market participants or various other things.
Right.
And also how to figure out whom to hold liable. So while many have been looking outside of the US to say, okay, we want some kind of harmonized rules that are more liberal than the US, or harmonized rules or other rules that look more like those of another jurisdiction, because the US market is so is important, right, to the rest of the world. The SEC and the CFTC, they have big voices. And so part of another recommendation within this report really was to look at, how does this apply to your existing frameworks wherever you are? And one last thing I would just add, which I think this goes to the comment about the sophistication of various regulators. I think it's worth noting that the IOSCO report really focuses in one section on MEV, right? And so I think it doesn't surprise me necessarily the timing of the announcement of these DeFi cases with the CFTC and the IOSCO reports release.
Yeah. David, is that Curly weighing in on IOSCO reports in the background?
Curly's not a fan of peer-to-peer censorship, so I had to prevent him from barking on that. So.
We're just about out of time. I wanted to ask you both, what are you going to be looking forward to and reviewing in the next few days? I know I'm going to be pouring a glass of wine and reading IOSCO reports, but Josh, at your vineyard somewhere in Jersey, what will you be focusing on during the week? And then David, same question for you.
I think the same thing I'm always focusing on.
I left her
trying to catch up on
speechless.
reading, speaking or something, doing things like that for clients. It's really Groundhog Day in a good way, but always, you know.
Never boring.
Yeah.
I'm going to be focusing on some of the restructuring cases. You know, you have this bubbling up between Genesis, DCG, and Gemini. And, you know, there's been a lot of articles coming out about that. And now Genesis has filed a suit against DCG. And so I think this is going to get more interesting as we go along. And I think also Celsius is starting to tender votes for its plan of reorganization. So I think that vote is sometime in October. So I'm going to be, you know, following that as well, because there are a lot of cross currents that play out in these two cases.
David, Josh, thank you both. Real quick for the WSBA, those of you who might have seen it yesterday, we had a really great webinar, global webinar on the tokenization of real world assets. Shout out to our friends at Texture Capital. We had State Street, we had Providence, and we had Arca there as well. We'll have that available for public review on our YouTube channel next week. Thank you all for joining. And I want to wrap it up, guys, with one last thing. This is the first time that I remember in quite a while that we didn't mention FTX. Wishing you both a great weekend. Thank you, everyone, for joining. Would love to chat with you all soon. If you need us, info@wsba.co.
And by the way,
take care.
One thing, I see a comment from Nisa saying, thanks, agree. Interesting, they have a committee as well at CFTC that is against the rulings. Definitely will have
Commissioner Fahn's committee, I wonder? I don't know.
And if you missed part of this, it's on YouTube if you want to watch a replay.
This will be replayed on YouTube, published next Tuesday morning. Thank you, everyone. Have a great weekend.
Take care. Bye.
Bye-bye.